Today, when cash is king. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and prop news with a distinctively Australian flavour. Today I wanted to pick up the conversation about the cash ban, bearing in mind that we've made a submission or two and also a number of posts relating to the government proposed legislation which would ban cash transactions above $10,000. Now, this of course has been referred to a Senate committee and up to the middle of next month they're taking submissions. But there was some coverage over the weekend which I want to talk about, and also an event today which underscores the importance of cash. So firstly, let's look at the article in the Sunday paper from October the 12th. This was actually by Karen Middleton. And she highlights the fact that there is talk about the crackdown on large transactions, and of course Assistant Treasurer Michael Zucker was there in all his glory. And she makes the point that the legislation criminalises large payments in cash and will capture both lump sums and instalments that reach or exceed the threshold in total. And that threshold is, well, until it's changed, $10,000. And she made the point that the legislation is drafted so that some private buyers and sellers could potentially find themselves at a risk of 2 years jail or $25,000 in fine. And the Saturday paper has also confirmed that the Treasury is pushing ahead with consultations on a proposal to ban employers from paying wages in cash, requiring them to use traceable electronic transfers, as most already do, to lessen tax avoidance and enforce workplace laws. Now, like the cash payment limit, the move was flagged in the government's response last year to the 2017 report on its Black Economy Task Force. And remember that the Black Economy Task Force included significant input from the Big Four accounting firms. The paper goes on to say that the bill limiting cash payments to $10,000 has had scant public attention. Some business groups support it, but others are raising concerns about the broad drafting, the lack of the presumption of innocence, increased exposure to criminal prosecution on little evidence, and other potential implications far beyond its declared intentions. She says the government says the legislation is aimed at tackling tax evasion and other illegal activity, including money laundering, but it will restrict the use of large amounts of cash by ordinary businesses and consumers as well. And some economists suggest it may be a preemptive move to address people's tendency to hold cash and avoid banks during economic downturns, especially when interest rates drop below zero. Now, she went on to say that the government proposes exempting private transactions between individuals, for example, the sale of a private car through online marketplaces such as Gumtree, but only if each party has confirmed that the other isn't using the sale item as part of an enterprise. And a spokesman for Assistant Treasurer Michael Zucker said a transaction would be exempt if an asset is sold and bought in a private capacity, even if either individual is also carrying on a business or other enterprise. But he did not say what would happen if a person was buying or selling an asset to be used regularly for both private and business purposes. And remember that these restrictions are in a separate regulation, so it can be changed later as well. Now, while transactions of $10,000 would constitute a criminal offence, those of $9,999, $1 less, would not. And while deposits in the bank would be exempt, gifts would not. And paying more than $10,000 cash for any part of a transaction involving real property, land or buildings, would also be illegal. Then she went on to say, Australians are using less and less cash in daily transactions, but increasingly hoarding $50 and $100 bills. That is the case whether the money is acquired through declared or undeclared employment or illegal activity, such as drug production and trafficking. Reserve Bank of Australia research suggests 70% of Australians keep at least a small amount of spare cash aside from what's in their wallet. Now that cash is used as a buffer against personal hard times or an economic downturn, or to keep some of their income out of the banking, tax and welfare systems. Sometimes it's lost or forgotten. And cash is still favoured by seniors, people on low incomes and some migrants, although electronic payments are more prevalent. Domestic demand for high denomination notes, along with overseas demand from currency investors and would-be tourists, and use by casinos or in criminal ventures means $50 and $100 notes make up the largest proportion of banknotes officially in circulation. They account for 93% of the value of all banknotes, despite being the least used day by day. The Reserve Bank is upgrading the country's banknotes, adding new features of security and to help the visually impaired. And the new $20 note entered circulation last Wednesday. The $5, $10 and $50 notes were replaced over the past 3 years, and the new $100 banknote is due next year. But then she went on to say, but the government makes no secret of wanting people to shift to transactions that are easier to trace. The proposed criminalisation of large cash payments will be retrospective in some cases. If any part of a $10,000 plus payment is made after the law comes into effect, currently due to be January the 1st next year, it will be an offence. A single instalment towards the overall cost of an item or service would render the total payment illegal, even if most of it was paid before the law existed. Introducing the legislation last month, Michael Sukkar told Parliament that large, anonymous and untraceable cash payments were letting businesses underreport their income and undercut others by offering cash discounts. The practice has a profound negative impact on businesses that do the right thing, Sukkar said. The vast majority of businesses that diligently pay their tax and meet their other obligations are not able to offer the same unfair discounted price for their goods or services. But the proposed response could also ensnare innocent businesses and individuals, and that's the really important point. The legislation applies what is known as strict liability to relevant transactions, meaning prosecutors do not have to prove the participants intended to commit an offence. Sukkar's spokesman said any whole or partial transaction conducted in cryptocurrencies would be exempt, although the legislation defines cash as being either physical or digital currency, and that is an exemption in a regulation, which means it could be changed later simply by a written instrument from the Treasurer. Excluding cryptocurrency risks driving criminal activity further underground and making it even less traceable, but including it could put legitimate Australian users at a commercial disadvantage and will be extremely difficult to police. Now, some organisations have begun raising concerns about the bill's impact. CPA Australia, representing certified practicing accountants, is alarmed that people could be jailed for using legal tender. The CPA submission to Treasury condemns the legislation as lacking the presumption of innocence, being poorly drafted and reducing vicarious liability into criminal law, making one person responsible for the actions of another. The presumption that only tax evaders, money launderers and criminals use cash has resulted in a proposed bill and instrument that runs counter to well-established criminal law principles and has the potential to affect many Australians, the submission says. It extends criminal liability to innocent parties associated with a potential offender, such partners in a partnership, and has application to Australian citizens and residents outside Australia. It significantly increases the power of government agencies to investigate and prosecute people for an action without needing to demonstrate the commission of what would normally be considered a criminal act, nor the intent to commit such an act. And CPA Australia says the bill should be scrapped or at least overhauled. France, Italy and Spain have already adopted similar, although lower, payment limits. New Zealand's Reserve Bank has also begun a public consultation on the future use of cash, identifying which sections of the community would be disadvantaged if it disappeared and how to address that. In fact, they got around 2,000 submissions to their inquiry. The Reserve Bank reports that nearly 1.6 billion Australian banknotes are in circulation, worth $76 billion. Of those, only 25% are used in transactions. The rest are hoarded or otherwise held. The currency restrictions on the use of Cash Bill 2019 was introduced into Parliament on September the 19th, 2 days after the Coalition Party Room endorsed it. But Coalition MPs did not universally support it, with Nationals Pat Conigan, Barnaby Joyce and George Christensen and Liberal Russell Broadbent all speaking against it. Conigan believes that the proposed law will do little to achieve what the government wants, but will potentially harm law-abiding people. You're turning mum and dad Australians into criminals, he said. The only people who will abide by the legislation are the honest people. The people it will hurt is the grandmother who's decided to put a new kitchen in and pays $12,000 instead of $15,000 because she's paying in cash. And he said he's had a huge response from angry constituents. People object to this, he said. Last time I looked, cash is legal tender. People were asking him, why is the government sticking their nose in when we are doing nothing wrong? You're telling us what cash we can spend. And he questioned the political wisdom in forcing people to pay bank fees, especially at a time when the recent Royal Commission exposed questionable banking practices and when the official cash rate may fall further. If it does go below zero, the average punter is paying the bank to look after their money, he said. And Broadbent confirmed that he was also concerned about the bill. I don't know quite who they're targeting, he said this week. Cash is legal tender, and I wouldn't have thought $10,000 is very much anymore. I don't think it will make any difference to crooks. And Broadbent said seeking a lower price in exchange for cash was a legitimate way of negotiating, and he questioned whether the limit would reduce the black economy. The GST was meant to remove the black economy, remember? And the chief executive of the Council of Small Business Organisations, Peter Strong, told the Saturday paper that he supported the government's approach. But Strong said someone confronted with a cash or nothing ultimatum from a customer should be able to accept the money and then report it without facing prosecution. And he suggested the hotline and immunity provided the payment was declared. And he said there also needed to be a change in the culture that encouraged using cash to sidestep official systems. Until we get that change in culture, then there will be honest individuals out there who will absolutely feel the pressure to take the cash to feed their families, he said. Strong is on the government's Black Economy Advisory Board, which grew out of the task force whose 2017 report first recommended the restriction, and the legislation has now been sent to a Senate committee for examination. Its report is not due until February the 7th, more than 1 month after the new law is supposed to take effect. One Nation says it intends to impose the bill. Labour is inclined to support it. And Centre Alliance Senator Rex Patrick was among those who pushed for the Senate inquiry. We need to draw out all the unintended consequences, he said, and make sure these laws don't affect genuine law-abiding citizens. Well now, that's all very well and good, but there was one point that she failed to make, and it's this. One of the reasons why we should be careful about this bill, apart from the civil liberties and apart from the fact that we are essentially making what's legal today illegal, is the question of what happens when there is a technology outage. And this isn't just a theoretical discussion, because today CBA's systems went down. This is what they said. We are experiencing an issue with our network this afternoon. This is affecting banking services. We're very sorry for the inconvenience this is causing you. What's working? Well, the ATM and FPOS merchant services are working, and debit and credit cards are working. However, some debit card payments may be affected. But the CommBank app and NetBank are available only with limited functionality, but BPay services, including PayID payments, are not available. So in other words, payments to people via email. Cardless cash is not available. Branch services and call centre services are also affected, and CommBiz log on and some CommBiz payments are also affected. And a small number of branches have closed, but they say they're working to get them all reopened. And as a result of that, they're experiencing higher than normal volumes of calls to their contact centres, which means there are longer wait times. And some of the contact centre services are also impacted, limiting what services they can provide. Now, this is the point, of course, because one of the things to think about when everything is digital is what happens when the power goes out or when the banking systems go down, because suddenly payments are no longer going to be possible. And I experienced this a few months ago when we had a disruption caused by Telstra and many of the payment systems went down across the country. Luckily, I had cash, so I was still able to go and do the shopping and do the other things I needed to do. But if I only had a card, that would have created significant issues, and a few shops I went into were unable to handle the lack of electronic systems. So, as well as all the other issues, this is really right on the front line. And that's why I still believe that cash is king. And this is why I think the ban should definitely be opposed, and why we should still be allowed to use cash for transactions that we might need. Now, I will be writing a further submission to the Senate over the next few weeks, and I'll share that with you as we progress. But the message from today is, remember that the banking systems and processes and power will be required in a digital future. And I think we need a plan B. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.